All right, thanks a lot for taking us through all of that. I do understand that we have our guest for the show joining us, Rahul Shah, that's the VP at Equity Advisory Group, Motilal. Oswal, thank you very much for coming into the show there. Just a quick take as to what you're seeing in these markets first. We've seen how they've been getting spooked out. We've seen the kind of profit booking as well. Give us a sense as to where you feel we are at this juncture.
I think obviously the markets were in one way since last few sessions. If you've seen last 8 to 10 sessions, the markets were in rolling a one-way direction. So, and we saw one global sell-off we've seen today. So on back of it, we have seen some profit booking as well as some areas where the stocks or sectors which have done quite well in recent terms, where we've seen some profit booking happening. So, but I still feel that near term remains good only the market. So if I look at the analysis, what we do it on derivatives front, we've seen that where we had a highest open interest on 9,000 calls, so the Nifty couldn't move beyond that, and 8,600 on a put side on the highest. So I think the markets are in range of that if you take a broader perspective, 86 and 9,000. And technically, if I believe that, I think 8680 remains a good hold on the markets. Unless it breaks, then I think one should avoid longs and exit the long position what they're holding. Till that time, I think buy or decline should be the strategy in these markets.
Rahul, do you think markets are taking this global sell-off as a trigger for a possibly short-term bull market correction? And would you then say that this is a good time to possibly build your portfolio? As also, do you think that we may head back towards those life highs of 9,100 and beyond, let's say before the year end?
See, I think what we believe is, I think domestic story, I think what we've been talking about for the last few months, so I think that's been intact. So I don't see that global sell-off as an opportunity to get into equities as an asset class in India, at least definitely to build a portfolio as well. So I think the big sectors like say pharma, say private sector banks, housing finance companies, I think still remains a flavor. Plus you have oil marketing companies. The results are fantastic this quarter. So I think this momentum should continue going forward as well.
Rahul, of course, this is the golden question, which is what are the kind of winners one is looking at when you still have to play these markets? Can you get us a bit of a sense as to whether you're looking at particular industries very closely, or you're actually following a certain series of stocks that you think there's vast potential in going forward?
I think obviously we've been following a lot of stocks as well as the sectors. Sector specific, I mentioned earlier also, I feel OMCs looks quite convincing. I think lower crude prices we've been talking about since quite some time, and then we saw the results also this quarter were good enough. And I think in terms of, if you look at very cheap valuations also available in spite of good run up in the stock prices, and good dividend yield as well. So I think OMC obviously remains the winner from the current levels. So that's one sector one can look at. Second is pharma. I think it's been underperformed this year, this rally, and I feel the big boys, I feel still could be, one should look at those entering at these levels, which will add safety also to the portfolio, and obviously at the higher levels when we are entering it. So I think pharma gives a lot of margin of safety from current levels, which we are looking at. Housing finance companies and as well as the private banks, so I feel still a lot of room for it to get into it. So I think all these 3-4 areas what we've been talking about are the sectors and the stocks which we are looking at for in these markets.
Fair point, Rahul. What's your call on the metal space? Hindalco seeing cuts of about 6% today. UBS coming out with a sell call on the counter. We are of course watching out for Tata Steel earnings, likely to be an operationally stable quarter, although India volumes may disappoint on that front. What do you do with metals going forward from here on?
I think we have a very good rally, tremendous good rally from calendar till date, from Jan till date. Whatever we've seen in maybe in all the metal stocks. So be it be steel or be it be Hindalco or any other stocks in that perspective. So I think at higher levels, definitely investors are looking at in this space to book some profit. So my sense is that Hindalco obviously for an investor, if they're looking for a 2-year horizon or so, I think one should look at it. Rest, I think some profit should be booked in this stock.
Rahul, of course, all of us are keenly watching how this entire telecom war seems to be playing out. There's no question of a truce yet between the players that are involved. Given what we're seeing so far and also the reactions we've seen in the markets earlier with the telecom stocks, once we got the big news from Reliance Jio, how are you looking at the telecom sector? Do you think that there are bets that one can still follow, or should one just sort of stay away at this stage?
To be honest, we have seen that the telecom has been laggards since last 1 year. In spite of a good rally, what we've seen in the markets, the stocks haven't performed. So they have been Idea, Arcom, Bharti, all of them have been underperformers in these markets. Obviously, post Reliance Jio announcement, we saw some more correction in these stocks. So I think if obviously the valuations and way the stocks have corrected, my interest still remains on Bharti to be a better bet among the entire telecom play. So if I want to invest, I think in a telecom space, I think Bharti will be very well, betterly poised at these levels. So one should look at that in that space if they want to invest.
Of course, IT has been in the news for the past couple of weeks with the kind of commentary that has emerged. Seeing some kind of reversal in trade today, could be short covering, could be a flight to safety. But longer term, especially considering that Brexit wars have just started, we haven't seen the worst of it yet. And the kind of currency volatility that you see on the back of Fed comments, what should one do with IT stocks? Do you think that there could be a repositioning of funds in some of these names as well?
I think we've seen decent correction in all the large IT companies, be it BTCS, Infi, Telecom, HCL Tech. All we have seen, most of them are trading near at 52-week low. So I think obviously the profit warnings from the major IT companies like say TCS and mid-cap space Mindtree, I think those companies definitely have corrected a lot. So my sense is yes, the valuation comfort is good enough to get into it for investment. So my preferred would be Infi and TCS in that space.
Rahul, I'm just going to take you away from the IT space and also get you to focus on autos and auto ancillaries. What are you thinking when we look into that particular space? We've also, of course, seen some projections going into the festive season. But overall, where would you place your bets there?
Sorry, can you repeat it?
I was asking about your take on the auto space as well as auto ancillaries.
My sense on the auto space, I think we've seen a good monsoon. We've seen most of the auto stocks have rallied quite, be it with two-wheelers or four-wheelers, or maybe in the CV space. So I think we've seen a good rally. So maybe in that perspective, Hero Honda and Maruti remains our preferred bet, and Eicher Motor. So these three stocks look still convincingly. Though they have moved up quite sharply, I think there's a lot of still steam left in this space. So I think one should get into those stocks still. And in auto ancillary, I feel Bosch and that Bosch looks quite convincing. The stock has obviously rallied quite a bit. So I think still with the stability of earnings, I think that stock one can look at buying that. And second is Motherson Sumi. So these two stocks looks quite convincing from here also.
And of course, Rahul, a call on banking and financials as well. Bank Nifty receding from its 20-month high, over 400-point cut, giving away that 20,000 marks, all components deep in negative zone. But it's been a good last 3 to 4 months for banking stocks, especially mid-cap PSBs, as well as some of those NBFC names. Where do your preferences lie?
Still, I think we've seen so my preference definitely still lies in housing finance companies, which I mentioned earlier. So maybe on a F&O front, I think LIC, Diwan Housing, and that's been a larger place, mid-size Canfin Homes. I think these are the three ideas which we've been very bullish on housing finance. And banking, private sector banks, I think ICICI Bank looks quite convincingly from here. So reasonably priced and obviously not moved up in terms of to catch up with the other private sector banks in terms of valuation. So my preferred bet would be in private sector ICICI Bank and IndusInd Bank. So these are the two ideas on our banking side.
All right, Rahul Shah, that's the VP Equity Advisory Group, Motilal, Oswal. Thank you very much. It was a pleasure having you on the show. on this Monday afternoon. Thanks for that. Still ahead, we will put the spotlight on Man Industries, the stock cracking after it posted a weak set of numbers. We'll be speaking to the management just in a few moments. Please stay with us.